Hi everyone, welcome back, and today is the 5th of April 2021, and today we will be looking at one topic on how to recover your losses in the stock market by selling covered call. I've done this a number of times before, and I'm going to do that again today because I have a lot of options that expired last Friday. So today I'm going to be doing on the AMD, Blink, FUBO, FSR, we'll take a look, and then Nio and Peloton, PTON. So that is all the options that expired last Friday. So today I'm going to be selling option against all this stock. So very simple. When I'm doing a recovery on this option, the first thing I'll do is look at my trade price, which is 92, but because I sell a premium a couple of times before, so my average price is actually lower than 92. For AMD, I believe it should be around 87 or 86. The easiest way would probably be I'm looking to sell a call on 92. Then if my stock were to get called out, I'll be making break even on the stock plus all the premium previously and currently I'm keeping. So that is the easiest. So when I take a look at the option, so I'm going for the 2 weeks option because the current week option, I believe there's not much premium in there. So I'm just going for the next week option. So we don't have the 92. So what we have is a 92.5 or 90. I can go for the 90 because my average cost is actually lower than 90. So that would make the decision simple for AMD. And the bid is actually currently at 25, so I'll just switch it to 25 and take it. So I'm done on the AMD, and then the next stock is very interesting because for Blink, my trade price is actually 39 plus all the premium that I receive is actually less than 39. I believe should be about 35 or 36 region. And right now Blink is at 42.40, so I'm actually making a profit on Blink. So I'm making about 300 plus. So should I just close Blink away and take the profit? I don't do that usually. I prefer my stock to get called out. So same thing, I'm going to sell the Blink 2 weeks later, next Friday, but I'm not going to sell it at 39 or not even 41 currently, because that would be at the money option. I want to sell it higher than the current price. And because Blink, I'm actually making a profit, so I want to sell a call that is higher than current price and higher than my strike price. So the rule of thumb is always to look for 1%. In this case, I'm selling next Friday option. I'll be looking at 2%. So that would probably fetch me about 50 call. I think that's fine, because by selling a 50 call, if I were to get call out in this option, then I get to make $11 on my current stock position on top of the premium that I receive. So $11 from the current price, that is about 1,100. I think that's good. So I'm going to sell the call option that expire next Friday, and I'll squeeze somewhere in the middle, and then we'll come back to that later. And then the next stock would be FSR, Fisker. So I'm also making money on Fisker. So should I sell the stock? Like I mentioned, I don't usually do that. So I prefer to sell a option on it. So I'm done on the Blink. So for Fisker, I'll look at 25 option, and I could get it at 12 cents because I got 5 contract. So I'm going to sell 5 lot, and that would fetch me just $60, but that's fine. I'll explain the reason behind it at the end of the video. I come back to Fisker in a while and let it have a chance to get filled. So next I will be looking at FUBO. My average price on FUBO for 200 share is 28. FUBO is currently at 22. So let's take a look at FUBO. Same thing, next week option. Then I would like to sell the 30 call option. So that will probably get me about 39 cents. I got 2 contracts of it. So let's look at the next stock. So Nio. So I have 200 share of Nio. My average price is 51.50. Nio is currently at 40. So let's take a look at the Nio. I'm most likely going to sell the 50 call because I got 200 shares, so I'll sell 2 contracts. So I'm done for Nio. And then the next stock I have is Peloton. So for Peloton, my average cost is 135, and right now Peloton is at 110. But my average cost, I believe, should be about 127 or 126. So selling a 135 call would most likely not fetch any premium. So I will have to sell it lower and probably at a 125 or 130. I think 130 is fine. I'm okay to collect about 50 cents of premium on it. So I'm done on FUBO and Peloton at 130. So let me squeeze in at the mid price. Let me work on these 2 orders and I will continue the video in a while. So I'm done for all the stock. Those stock that I have 100 share, I have sell a call option on it. If you look at Baba, I only have 10 shares, so there's nothing I can do on Baba. Either I cut loss right now at $59 loss, or I have to wait for the stock to go up. So same thing for Fastly, Nvidia, Tesla, and this TER. So what I've done today is this few stock, FSR, Peloton, FUBO, Nio, AMD. So let's take a look at how much premium did I collect. So let's start from this FSR. I sell 5 contracts, so I collected 50 cents. And then the next one is Peloton, 51 cents. FUBO, 39 cents, 2 times. And then Nio, 17 cents, 2 times. And then I have Blink at 84 cents. And I got AMD at 25 cents. So that wasn't a lot of money. It is $3.22. So that is about $322 for the next 2 weeks for this few stock that I've just sell the call option. So what if I don't do anything on it? So if I don't sell any call option, then I don't even get to collect $300 for my position. Then what I can do is I have to wait for the market to go up for me to realize a profit. But by selling a call option, then I managed to collect $320 for all this. And if the market do nothing, I get to keep all the premium and I can resell it after next Friday. But what if the market go up? Then that's good, because if you take a look, for AMD, I sell it at 90 call. So what if the market go up from now to 90? Then I get to profit $1,000 from this position right now, because the AMD is currently at 80. So same thing for the rest of it. What happened if the FSR were to go up from $16 to $25? Then I get to profit another $900 for every 100 share, and I got 500 share. So I get to keep another 4,500 of profit from this. So would I want the market to go up or go down? I actually want the market to go up. But what happened if the market were to go down? So if AMD were to start dropping to $75, and then we have the FSR start dropping to $13, and my Nio start dropping to $35, what will happen to that? Then I would have an actual loss on all these positions. But if you have done nothing, then you won't even get to collect this $322. By selling it, even if the market come down, I get to keep $322. But the market may come down more than $322, that I agree. But it will be better than if you have done nothing, then all you can do is hope that the market will go up. But by selling a call option, then I can hope that the market go up. My option get called away, that's a good thing. And if the market go down, then I'm glad that I sell some option. At least I get to recover $320 on this. So that is actually how you can recover some of your losses in the stock market by selling a covered call. That is if you own at least 100 shares. If you have less than 100 shares, then you can't do this strategy at all. So thank you for watching the video. I will see you in the next video. If you like the video, please subscribe and share.